with the crypto market seemingly in free fall and everyone panicking that their bags are going to go to zero, the big question is what is going on and how bad is it going to get? We got some bombshell news coming out of the US today that really did tank the markets. But is this an opportunity we've been waiting for? Could you finally DCA on those positions, ready for a blast off very, very soon? Well, let's break down exactly what's happened. This should then give us an idea of what is to come. With all that being said, make sure you hit the like and subscribe button for all of your daily cryptocurrency content. And although today your bags are down, we're here to try and make sure that they are on the way back up ASAP. Right, with that being said, let's get into it. So, not often I start with the charts, but you can see it is a pretty painful day and has been now for the last 2 days since we got Jerome Powell basically not cutting rates and being very hawkish on the market. Well, for Jerome Powell specifically, it just got a whole lot worse. And actually for the US economy, there are some cracks and some concerns that are showing. Now, we know that Donald Trump has certainly been arguing and been very vocal about the fact that Jerome Powell is, quote, too late. And yet again, it does seem to be that case. With macro data coming in on the jobs market today, not playing out as expected, it is really a concern for the markets. And Jerome should have cut rates. We all told him he should have done it. He just didn't listen. But Trump strategically has been trying to influence the Federal Reserve direction towards the policy preferences, which again today looks like that would have been good news. Now, since Jerome Powell did announce no rate cuts, Andrelina Kungler, I have to get that name right, has actually left the Federal Reserve, exiting amidst this political pressure. And I think the reality is that it's all sort of come back to, well, Trump might have been right. Allegations of economic manipulation fuels debate on the Federal Reserve futures policy. And here is where it gets a little bit sticky. And I don't want to get too much into the politics of it, but there is a debate right now that all of this jobs data that's come out, and we'll break it down specifically in just a minute, is actually a political stance, and it definitely isn't playing out favorable at all, and markets simply don't like it. So what happened and why is the market crash? Well, the US labor market is showing cracks, and it's actually showing significant widening as job growth hits a stall speed. Now you might be thinking, hold on a minute, Tubit, what do you mean? The jobs report came in, expectation was 108,000 jobs on a previous 147, as you can see on the screen there, from June. The number came in at 73,000 jobs openings in July. Now, where it gets significantly worse, you can see some of that screen rolling through. May and June payrolls were actually revised down by 258,000 jobs, leaving basically 19,000 jobs for the month of May and 14,000 jobs for the month of June, which is a massive problem. And the way to solve that and support that is, you guessed it, should have cut rates. Actually should have cut rates months ago from Jerome Powell. Unemployment raised as well, 4.2 from the previous 4.1 in June. So this was a disaster of a jobs report, a real concern, in fact. And the fact that Jerome Powell basically said, we're going to wait and see what the job market does. Let's make sure that it's fine, it's okay, is simply not true. And the debate here now is that they should see rate cuts. The price index now, the actual CME group has priced in 3 rate cuts, over 1% through September, October, and then potentially into December as well, which is absolutely insane and tells you that right now there is a significant concern for this, which does mean that people are a little bit nervous that we might hit a recession, that the markets could be over and everything's going to freaking zero. You know how things all play out. But how bad is it? Let's talk about what that actually looks like. Well, the crypto market did crash as we saw Bitcoin tumble below 114. Actually, right now, at the time of recording this video, 113 and barely clinging on for dear life. Ethereum and everything else taking absolutely giant hits now. ETH down 7%, Solana 7%. The market is getting worse as more of this data is analyzed and understood, and actually not getting better. And we're probably going to see more pain. Look at this. Ethereum sell volume hit 335 million in just 2 minutes. The reality is, though, the slightly bullish sentiment here is this is all retail short-term sellers. What we actually saw is accumulation on some of the big holders. For example, the ETFs continued to buy today on Ethereum and on Bitcoin. So longer term, actually, the markets still feel like they're in an uptrend. It still feels like we've been playing out as we expected. The debate now, though, is what is coming next. And clearly, this is a discussion that will be high on Trump's agenda and, more importantly, on the Federal Reserve. So going back, what does time gone by tell us about federal rates? Well, you can see here the federal interest rate evolution. How has it played out back since 2015? Again, aligning things like pandemics and all the rest of it. And then how does it correlate directly to the Bitcoin price? Well, the two are very intrinsically linked. And in fairness, If you're a Bitcoin investor, then you are going to be slightly better off than if you're in something like the NASDAQ, the S&P 500, and many others. What we can say here is when the Fed is cutting rates, this is optimistically seen as bullish for markets. Risk assets become more viable. People have a little bit more money, and you can see exactly where we see this low here back in 2020 all the way through 2021 correlate perfectly to the bull market of 2021, the most insane bull market we've seen for a while. Now, the savvier view would say, well, hold on a minute, 2bit, the spike in interest rates. Well, how does that affect the Bitcoin price? Well, we generally see short-term pain, followed by then accumulation and then gains back on the Bitcoin price. Everything kind of phase out. Well, that's exactly what we're seeing right now when it comes to the price of Bitcoin. We actually see the interest rates high. We just broke all-time highs at a 4.5% federal funds rate, and actually everything was looking pretty bullish. The fact that we've got nuclear submarines going to Russia and the Federal Reserve not cutting rates and people leaving and allegations of basically political bias, that never helps anyone. But what it does tell us though, longer term, actually this is fine. It is just a traditional shakeout in the market. And actually, when you look at macro effects here, there's a number of plays out. The fact that we're seeing a longer term trend line, and you can see this played out on the charts perfectly. If you just look at a macro side, this is just a perfect retest of a lower range. And actually, this does mean that we could come a little bit lower. For example, this is where we take the market bottom to the market top, intersecting with a couple of these key lines that we've seen. We could absolutely see Bitcoin come down, maybe retest the lower 112s and 110. That wouldn't be out of the ordinary, in line with very typical bull market scenarios, before bouncing back to the upside as Federal Reserve cuts come in into September. This also may play out into a further bull market run into 2026. But I don't want to get ahead of myself. I just want to let you guys know what's going on, because I'm sure out there, lots of people are feeling very nervous and very frustrated where they've bought their bags. Here is, though, in my opinion, and it's not financial advice, the perfect opportunity. If you bought Bitcoin at $123,000 and you have a little bit of capital on the side, well, $113,000 feels like a discount when we're honestly going to $165,000, $170,000 this bull market. So we will stay very close to this data. It's going to absolutely drive the markets. And certainly as the weekend comes, probably at a good time. The boxes are on the ropes. Jerome Powell might be getting counted out for 10 as Trump may come in for the move next week. But as always, hit that like button and subscribe to the channel if you want to stay up to date with these markets. And more importantly, make sure your portfolio is dialed in. Until next time, thanks for watching. I'll see you soon.